Hey Goku, what's up, my guy? Hey, I heard you had this new single out. I'm gonna be the first to tell you, I really like your music, man. I saw it was a mixture of some R&B and a little bit of screamo. I don't know how to put it, but I think you're using a little bit too much auto-tune. Right, nobody wants to hear a robot. All right, man, whatever. Hey guys, welcome back to the After Hours. I'm the HL Beast. And today, we're going to talk about the return of the market. Now, when we talk about the market, we know that we are in a bear market. Now, a bear market, it's been really hard this year. It's actually my first bear market. But from the people that have been around for over a decade, I've heard it's one of the worst bear markets that they've seen. And when it comes to trading, especially day trading, most people are used to the bull market because we came out of a bull market that lasted over a decade. Now, during that bull market, you've had several periods where trading was kind of easy. Now, one of the easiest periods was during quarantine, around 2020 to 2021. Those times are over. We are in a bear market. And at this point, we have to double down on discipline. And the reason for that is because the market is trying to train you. What they're trying to train you to do is to hand over your wallet. Now, they're not going to do it all at once. They'll do it in a subtle way. The market trains you to chase stocks, especially low float stocks. So during August, the market saw an uptick in activity, and it finished the month with a bang. Now, the bang that you saw was de-SPACs. Now, when I talk about de-SPACs, I'm talking about mergers, such as OTC uplisters. That's originally OTC stocks that merge with another company so they can uplist to trade on the NASDAQ exchange. Now, the recent uplister is ICCT. Now, ICCT is a software and technology company that focuses on healthcare stocks. Now, ICCT was originally an OTC, and now you can call it an OTC uplister because it just uplisted to the NASDAQ exchange after they merged with FG Financial Group. Now, this isn't the first time that you've seen FG Financial pretty much carry a company into a new level. But when it comes to the market, we have to understand there are levels, and no matter what level you're on, it requires discipline, especially on the really hard days, like in a bear market. When we talk about ICCT, what you have to understand is that ICCT used to be an OTC. Now, this OTC was trading somewhere around 17 cents. After the merger, there was a 1 to 29 conversion. This conversion ratio happens after the merger. When it uplists on NASDAQ, it has to be above $1, which is called the compliance level. When you're above the compliance level, NASDAQ doesn't complain. But if there's some type of sketchiness, you get kicked out of the neighborhood. With ICCT, most of the people followed instruction. But after about 3 hours, maybe even 2 hours into the trading period, ICCT halted with a T1 halt. And when you went to NASDAQ halts, normally you see a circuit breaker, which is a volatility halt. And it could be anywhere. So ICCT, 2 hours into the open, it suspended trading. And when you went to look for the headline of why it suspended its trading, you normally see a T1, T2, T6, or a T12 halt. These are halt codes, and they usually give you an idea of why did the stock suspend trading. There's usually followed by a PR release. This is the exchange explaining to you why did the stock stop. 9 out of 10 times, it's usually a circuit breaker. The stock is moving too fast, and it's a volatility halt. And also, 99% of the time, there's no actual headline outside of it being a volatility halt. In the rare times that you have no explanation for a halt, it's usually a bad sign, especially since it leads most likely to a T12 halt. And those are the mother of all halts that can last up to 5 years, probably even just until it gets delisted back onto the OTC. After ICCT uplisted on Monday, it had a conversion ratio of 1 to 29. On its first day, it went up 250% before it was halted. So ICCT, it suspended trading, but the press release made afterwards didn't give any details of why it was suspended, other than there was a conversion error. This means that brokers were having errors across the board, and they needed time to fix those errors. There's been conversion errors in the past, like last year in COSM. When it comes to these conversion errors, it matters most to the people that had shares before the merger. People that had shares of COSM and held it through the merger. A lot of them ended up in a short position. If you owned as little as 2,000 shares when the stock was at 20 cents, you'd be in debt by over $80,000. And that was because in the after hours, the stock squeezed all the way up to $24. And we're talking about history here. Now, ICCT, it's not repeating history, but it sure rhymes because ICCT had a conversion of 1 to 29, but not all the brokers got the memo. because some of them made some mistakes, and this time the exchange stepped in. Now we learn a little bit from history, because this time there was a halt that lasted until the morning. Now the typical response to a halt that lasts more than 24 hours is everyone sells the stock immediately, because now they're in a panic. Now the panic selling did happen on ICCT, but it was quickly bought up again because people started to realize ICCT had a float of anywhere from 150 to 70 million, depending on which site you looked at. But in reality, after the numbers are fixed, it had 5 million float. With this kind of progression, you see the stock was undervalued. And because of that, a lot of people bought the dip. Now with ICCT, these kind of errors, you do not want to trade them. ICCT, this was extremely overshorted. Now some of this has to do with the error. The rest of it is the context at when ICCT happened. Now some of this has to do with the conversion error, but the rest of the hype actually comes from the context of other tickers at this time. Now with these low float tickers, especially when we're talking healthcare and technology, let alone putting them both together, making it a biotech, we understand they can have big numbers. Now the best opportunities for all these hypes and parabolics is usually the next day, where it's a little safer because it's less crazy, because no one wants to touch it anymore, which means it's slowly going to be forgotten. Now we do remember CLSL, and that's just because if we forget our history, we're a fool. Now the real importance of ICCT is the attention that it brought to the market. We're in a bear market right now, and things have been slow. But when it came to the past 3 tickers, we've seen tickers in the high double digits, hitting thousands of % per day. Now, what's really important for ICCT is the message it gives for the end of the month. We've had VFS, ADTX, ICCT, and many more plays. This high uptick in activity shows that the market is back. Now, the market did leave for about a month to where most days there was nothing to trade, no actual volume. Now, the volume's here and people are ready to trade. And that's why you need discipline to be consistent. Not all these trades are supposed to be traded. Some people made their money in the beginning of the day and then lost most of it towards the end. In 2023, trading has become much harder. And that's why you need to have excellent risk management so you can be along for the whole ride and adapt at your own pace. All right, guys, that's all I got for you today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.